Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's recap and look ahead. Some Mondays behind us. A little bit of an up day. We came in saying, what could we look at this week to figure out whether or not we'll get Dow 20,000. I posted 3 charts on Twitter, one being with the Qs, one with the small caps, and obviously the S&P cash. And at this point, you had some overseas events that were, upsetting. Obviously, I can't even get into it as far as what's going on in Aleppo, etc. But you're here to listen to me about the market, and when you see things like that happen overseas and the market doesn't go down, I guess what you could read into it is that the market's also very strong besides looking at the levels. So let's move on. S&P cash. S&P cash. We've been going over this chart for a long time. There was your pre-election sell-off, and then this is when it crossed above your descending trend line, digested, and bam. Look at this. This was your last viable pivot before it went again, and now it seems as if we are wedging. Which way will the wedge resolve? If the wedge resolves to the upside, we have Dow 20,000. It feels like it wants to, but again, every time you get a move, you go back to the well one too many times, it could get a little wishy-washy. But at this point, I would say if someone put like a, mistletoe to head, where I had to kiss someone else besides my wife, which I've never done, I would say above here, which is 2277. I would say active guys, if we were to start triggering below, just say yesterday's low or Friday's low of 2254, we would probably reduce a little bit that maybe the 8-day breaks, and then you get a little bit more of a corrective phase. But as of right now, it's getting tight. If the market really wanted to go down today, it could have, and it didn't. So we'll see what that leads to. Small caps also talked about what goes on here. This was your pullback, okay, from highs, and it's wedging also. It's having a little bit of a problem with this 137 area, but still hanging in there. So we'll see which way this resolves. Getting pretty tight. So next day or so, I think will be interesting to see which way it does go. This has also had a really nice move and hanging in there. And granted, there's not enough power to get up and go, but it still doesn't mean it's a short. We had a little bit of a short here when it went below this prior low, and didn't really amount to much. So just keep that in mind. Talked about the Qs holding the prior breakout, and at this point, so far, it is doing it, which is sort of constructive. Here is your 8-day moving average. The longer it stays above this 119.30-ish, the higher the probabilities that it takes us out to the upside. 8 days right there, still above the 821 days, just on a short in the brain. Doesn't mean you could buy highs, because anytime you add to these things lately, it's not the best thing in the world to do. But ever since breaking above and reclaiming the moving averages, it's been more of a buy the dip, and maybe in the next day or so, it goes to the upside. Let's take a quick look at the XLE. XLE, little wishy-washy. Why is it wishy-washy? You had, that strength that was sold, and then it crossed below this prior low, and now it's not really reclaiming it. So at this point, it's not a headwind, but it's just not a tailwind. We'll see what happens here. At this point, oil is always very slippery, so we'll see if it just gets up and goes, which it's done before. Then let's go to the financials. I listed all the financials and what they needed to hold. And today, some guys made some quick active money short these things, but they didn't break down. If you would have added one too many times in Goldman Sachs, you turned a cute short into probably a nothing. Now at this point, you have a little red dog reversal, held the 8-day moving average. So, who knows how long it's going to stay in this range before it makes new highs. Look how long people got driven to, frustration land, after this first move, probably shorting, a short add, and then it went. So don't be that guy. At this point, it's come a long way, but it hangs in there. JP Morgan also, there was a cute little short, but I think you were better off buying it versus this prior low. It said, in the note, if you read the note, said if JP Morgan holds 83.76, chances are market's not going to pull in. And then listed Friday's low, saying we're better off looking for some kind of red dog reversal around it. And now we'll see how long it goes sideways for. This basing period took a long time, before it went again. So who knows how long this is going to take as the moving averages catch up. The banks have come a long way, and you can look at it two ways. So just because it's hard to buy doesn't mean it's a short, and just because it's not a short doesn't mean you have to be all in long. So wait for this setup to continue to go sideways. In high beta tech land, I came in with a few things, and Still, Netflix to me looks like best in breed. I came in long it. I'm still long. I have a little bit more than I had overnight. I do like this pattern. It's, you had a nice little red dog reversal around the 8-day again. The low here is 124.01. It stopped probably some people out, but hopefully, I remember I said if it holds 122.50, it's fine. Well, it held 122.87 and gave you a little bit of a, of a bounce. And now we'll see if there's any kind of momentum here. This I would assume would be something that could have some momentum. Doesn't usually get streaky like a few days in a row, but we'll see. It's one of the stronger ones. Tesla also came in long. It sold off a little bit in the beginning, but it held where it had to. I think we listed 200-ish or 197-ish as support. Didn't even get down to there and gave you a little doji. It's going to need some kind of crazy news or something to really take out this 200-day. But overall, I think that it's acting better and it's worth holding and getting to know it again, because this could be a better 2017 story with electric cars and Musk on the, on Trump's good side, et cetera, et cetera. We'll see. It's done a whole lot of nothing since April of last year. So, maybe it wakes up and we'll see. But to me, last time I really listed it was right here when it broke above this 194.50, and it's been acting well, and I think it could, it could do better. So just don't have short on the brain here. Amazon is, not the Amazon of old. I'm trying to figure out if I can catch some kind of catch-up trade. I thought perhaps it would start acting better once, the summit was over and Trump didn't, go after him, but it hasn't happened yet. You could say it's getting kind of tight here. But it's definitely not leading, and Amazon's better when it leads, and it's below all the moving averages, and some people leaning short. To me, we had a nice long here, okay, that got reversed. So we'll see if it, if something has to happen for it to act better. I am long some overnight, and we'll see. It had a quick spurt and then just died, and then it's not fun when that happens, but it is what it is. At this point, it is tight, and it's Amazon. So that's what I was just saying to the guys on the VTF today. I know a lot of people were thinking rollover short. I was just be careful. It could go $20 in a heartbeat, and then all of a sudden everyone wants to be long again. So kind of anticipating here. I'm still in some calls also from this day. We'll see what happens tomorrow. If something can get it really going on a heavy volume, still below the 50-day, and still, not the Amazon of old, but sometimes it goes through phases like this. And I think the Alexa is friggin' going to be their hottest product they ever had. I see it everywhere. And the little brown boxes keep coming into my my wife's doorstep. She's not stepping in a store, so we'll see which way this resolves. I would think that it's to the upside, even though technically it's still kind of in the semi-doghouse. Google did a red dog reversal today around that 808 pivot from the note. Okay, I didn't buy it, but some people did, and now you'll see if it could go sideways. Maybe there's a better setup now for it to continue. This has been acting so much better since taking out that 792 or this area right here. So see if that continues, and that might help lead the high beta a little bit. Apple was long overnight, gave it a little bit of a push. It's just there's no real setup here now, except for took out this trend line and then closed above the 50-day there, and now it's coming back to old highs. So we'll see if you can get through it, but it's, you have to like buy dips and just sit in something you're comfortable with. I actually got out of it today, but that doesn't mean you have to. Overall, in the macro sense, it does have a trend line coming around here where I do think it gets taken out, but I don't know if it's gonna be in January or after earnings, but I do think I'm not going to give you a sneaky peek into my 2017 report, but I think that this high does get taken out at some point. So keep Apple on the radar as well. Remember how everyone was talking about how this was a head and shoulders top, and I was looking at it also, left shoulder head, and it got blown out right here. That's kind of what I'm thinking is going to happen with Amazon. Everyone's starting to point to a head and shoulders top in Amazon, but that would get blown out if all of a sudden we start trading above 770 with authority or 790 with authority. So, until that happens, maybe the shorts have a chance. But if that gets taken out with authority, just know that there's going to probably be people who are scrambling. That's really it. Today was one of those days where there were things to do. If you bought one too many times, you were in trouble. With high beta tech, I know I was sitting in there all day. I added once to Netflix on strength, and it ruined my average cost. I did the same thing with Tesla, but, and then Amazon went so fast that if you bought a pullback, it just kept trickling and trickling and trickling. So that was probably annoying for some people. And then the banks was going back and forth. A lot of people felt real comfortable short, thinking maybe we get a multi-day pullback. And then all of a sudden, markets came in, the banks went up, and the tech drifted. And they had to probably cover their shorts in the banks. And it was probably better to buy those red dog reversal pivots, because at least you're on the right side of the trend versus looking for the cute trade that people have been looking for 2-3 weeks and have been annihilated if they rolled it up versus paper cuts. That's it. It's Monday. I got to jump. I'm going to do my Asian recap, and I'll see you at the morning call tomorrow. Have a good one.